What up, guys? Rhett Weaver here from Lifetime Home Loans. Today, we finally got the news that we've been waiting quite a while for. The inflation report came out today from the government. Every piece of that information that came out was worse than what they were expecting, which means we saw interest rates rally, get a lot lower, and then we also are seeing the stock market just on a tear right now. And so this is amazing news for the economy. It means things are slowing. It means things are getting better, which also means we can start lowering interest rates. For real estate agents out there, this means there's more affordability. With a lack of inventory, we're going to see homes move a little bit quicker. We're going to see home prices kind of jump up. I want to break down the consumer price index and also the shelter and where it's projected, because shelter is a huge portion. And let me kind of back this off a little bit here. But if you look here, shelter is 43% of this overall reading. And I'm going to show you some data as to how that's going to get better and how it's going to help the overall inflation moving forward. And we should see rates continue to really just decline and get a lot lower from here on out. A couple things to kind of hit just really fast here. Year over year, as far as the headline, went from 4% down to 3%. Core, this strips out food and energy. This is the one where the Fed believes that they can control. They thought this would come in around 5%. It went from 5.3 down to 4.8. That's a big number. And that's why we're seeing interest rates get a lot lower today. Used cars was a big one. It actually dropped by 4.5%. Last month, it was up by quite a bit. So to see that year over year come down, that was a big number. Airlines are down quite a bit as well. And then obviously shelters and rents. And this bottom one is lodging away. That's been a big one as far as like Airbnbs, hotels, and things like that. So definitely everything as far as spending has been slowing down quite a bit. The year over year is getting a lot better. And let's take a look at kind of this chart right here that shows us a little bit about the overall consumer price index on shelter. If we take a look at it from July of 22 to where we're kind of sitting right now, we can see that on the year over year, things are only going to get better. So if this is 43% of that total reading, this is going to continue to fall, and it's just lagging a little bit. So if we take a look at this chart here, this blue line is where we're currently sitting right now. This yellow line is really the lag of the year over year, but it's made that turn, it's crossed, it's coming down. And that's why we got that reading at 7.8. When really, if it's on if it's in current time, it's at 3.7. So as this number begins to come down, we're going to see inflation because of a 43% of the CPI report is shelter. We're going to see that inflation number continue to fall because shelter is just such a big number. So some really good news today. Let's kind of take a look at the markets as far as the chart. If this is your first time here, anything in green means interest rates are getting lower. Anything in red means they're getting higher. So as we can see, we had these levels of support. It looks like we're obviously hitting one of them, and now we just got to break through them. Tomorrow, we're going to get the producer price index reading, which should give us another good indication and hopefully break some of these support barriers here and kind of move this thing forward. And so if you guys have any questions, please reach out. But this week is a great week for interest rates, and let's continue to watch this.